All right, today we are diving deep into a really precise time-based trading model known as the silver bullet. Now, this is a framework that's really designed to just cut through all the noise and help you identify these high-probability setups that happen in very specific windows of the trading day. So if you're looking for a much more structured approach, you're going to love this. Let's get right into it.
You know that feeling, right? You're staring at a chart, price is flying all over the place, and you just feel completely lost in the chaos. Honestly, you're not alone. I think the biggest challenge for a lot of traders is finding a clear, repeatable setup they can actually rely on. A system to follow when your emotions are trying to take over. And that is the exact problem this framework is built to solve.
So, here's our game plan. First, we're going to cover the core concepts, the big ideas that make this whole strategy work. Then we'll walk through the 4 essential steps, one by one, marking your key levels, spotting that critical liquidity sweep, confirming the shift in market structure, and then, the best part, pinpointing your exact entry.
Okay, so before we jump into the how-to, we've got to get our heads around the what and the why. The entire Silver Bullet framework is really built on just 3 fundamental market ideas. Once you get these, I promise the rest of the strategy is going to click into place perfectly.
First up, liquidity. The easiest way to think about this is like fuel for the market. It's just a giant pool of orders. We're talking stop losses, breakout entries that naturally builds up above recent highs and below recent lows. The big institutional algorithms, they're literally designed to hunt for these zones. So for us, understanding where that liquidity is, well, that becomes our treasure map.
Next up, we have the market structure shift, or MSS for short. Think of this as our big confirmation signal. So after the market goes and grabs all that liquidity we just talked about, we're looking for a really decisive break in the opposite direction. This shift, it's a huge clue that the market's real intention might be changing.
And the final piece of the puzzle is the fair value gap, or FVG. And this is really interesting. This is basically an inefficiency in price, something created by a really strong one-sided move. It leaves behind a little gap, an area the market often wants to revisit to sort of rebalance itself. And that makes it the absolute perfect target for our trade entry.
All right, theory's over. Let's get our hands dirty and move into the practical application. Step 1 is all about preparation. Like any good plan, success here starts way before the action even begins.
So here's the entire process, the whole playbook at a glance. It's a really logical sequence, right? First, you prep your chart. You're marking the hunting ground. Then you wait for the market to make its first move. That's the sweep. After that happens, you need confirmation with that market shift. And only then do you start looking for your entry. Let's dive into step 1.
So this all starts before the main trading session even kicks off. Your only job, right at this stage, is to mark 2 critical lines on your chart, the high of the previous session and the low of the previous session. These 2 levels, they become your main points of interest, simply because this is where all that juicy liquidity we talked about is most likely to be sitting.
Okay, our levels are marked on the chart. Now we move into the next phase. And honestly, this part is all about patience. We're not trading yet, we're not clicking any buttons, we are just watching for the catalyst, that first critical move from the market.
So all your focus is now on those 2 lines you drew. A liquidity sweep is what happens when the price pushes decisively through one of them. It could be a really quick spike or a powerful candle, doesn't matter. The objective is the same: breach that previous high or low and trigger all the orders that are resting there.
Now, it is absolutely essential to see this not as some random breakout, but as a purposeful action. The market is literally engineering liquidity. It's grabbing fuel to power its real intended move. This is the setup. This is the event that makes everything else possible. Let's move to step 3, and this is arguably the most important step for protecting your capital. After that sweep happens, we don't just jump in. No way. We have to wait for the market to prove our theory right. This is where discipline really pays off.
So, let's say price just swept a high. What we're looking for now is a strong move down that breaks a recent little swing low. And if it swept a low, we're looking for the opposite, a powerful move up that breaks a recent swing high. This right here, this is that market structure shift we defined earlier, and we're seeing it play out in real time.
To put it as simply as possible, the market structure shift is your green light. It's the market basically tipping its hand, telling you that the initial sweep was probably a fake-out. It was a reversal, not a continuation. The market has shown its intention, and now we can get ready to make our move.
And now for the final piece of this whole puzzle, step 4. We've got our setup, we've got our confirmation. So how do we find the most precise surgical entry point? Well, this is where that fair value gap comes back into play.
So look at that strong, powerful move that created the market structure shift. Somewhere inside that price leg, you'll often find a small pocket of inefficiency. That's your fair value gap. And that little gap, it acts like a magnet. The odds are very high that price is going to want to pull back into that area before it continues on its new path.
This is where it all comes together. This is where you place your order. You enter inside that FVG, you put your stop loss protectively on the other side, and the whole idea is that you're anticipating the market will pull back to fill that little inefficiency before launching in the new direction, giving you an absolutely killer, high-probability entry.
So let's just run through it all one last time, nice and quick. You mark the high and low, you wait for one to get swept, you confirm the reversal with a market structure shift, and you enter when price comes back to a fair value gap. 4 clear, unemotional, mechanical steps. That's it.
And this quote, it really gets to the heart of this entire philosophy, doesn't it? A framework like the silver bullet isn't about having a crystal ball or predicting the future. It's about taking your own opinions, your own emotions, and just setting them aside. Instead, you have a defined process with a statistical edge that you can just execute with discipline, over and over again.
And that really brings us to a final and I think critical question for you to think about. In a world that's just driven by fear and greed, could a purely rule-based mechanical framework like this be the key to finally unlocking the discipline that your trading needs? That's the real power of a system, and what this explainer has been all about.